All right, everybody, it's Sean Price here with the Price and Price Group of Sampson Properties, and it is time for our Sellers Market Snapshot. What is happening in the Northern Virginia real estate market, and what do sellers need to do to take advantage of it and benefit as much as possible of this upticking buyer demand? Let's dive in. Okay, so yes, the buyer activity is continuing to increase. We're only expecting that hopefully to continue. Interest rates are, according to the New York Times and the Washington Post, they are finally under 6%. They're right around 5.98% for the first time since 2022. It's a little misleading because they actually dipped down about 2 or 3 weeks ago, and we've been hovering right around that 6%. So they're a little bit behind on the times. I'm not sure what source they're using. But the simple fact of the matter is that interest rates are improving. We've hit that magical 5% number, so buyers are starting to come into the market. So what does this mean for you as a seller? We're going to go through what the stats look like, and we're going to go through the actual contracts that have been coming through, so you can know what to expect as a seller, and then give you guidance on how to take advantage of what's happening in the market. So as always, our black line here is going to be demand. That's going to be buyer activity. This is a lead measure. This is the number of contracts, the number of properties that went under contract in the last 7 days. So this is as close to real time as we can get. So this is our demand. And then our supply, you can see that the inventory is on an upward trend, but it's kind of flatlining in that upward trend. So it's not keeping up with that increased buyer demand. So what that means is we have more demand than supply. So for sellers, that increases competition for your properties. Now, does that mean that you can just take any property, slam it on the market, and take advantage and get maximum market value? The answer to that, unfortunately, is no, and I'm going to show you why I say that. Before we dive into that, though, you can see that with our gray line here, this is our neutral market. You can see that we have been in a steady upward trend into that seller's market, again, making it more competitive for buyers. Now, something to think about for sellers. From your perspective, you can see that the inventory is kind of flattened out here. You have less buyer competition or less inventory for increased buyer activity. Once this inventory starts picking up for the spring market, you can see here, it just goes into a solid upward trend. You're going to see, even if buyer activity continues to increase, there's a strong chance that the strength of the seller's market, the competition for the buyers, may reduce. So if you look at last year, you can see we got into a higher trend. We got much higher than where we are right now, but the strength of the seller's market actually reduced. And that was because inventory was high enough to kind of give buyers choices. So if you're thinking about selling, I give the same advice to the buyers for competition purposes, but if you're thinking about selling on your side, you may want to consider going ahead and getting on the market now while inventory is kind of flatlined, so that you have fewer properties to compete against in the event that inventory does shoot up. Okay, so it's just a thought for you as a seller. So what can you expect to come in from buyers? What kind of terms can you expect to see on the contracts? Last week we had, this was 213 contracts, so it's a large sampling. We're usually in the 165 to 175 range, so a large sampling here. February 17th to the 23rd, we had over 75% of the properties went at or above listing price. 25% went below. You can see right here. So what's important about this is you have to put your property in a good condition and put it in the appropriate price for its condition. If you do that, your property will be one of the 48% that sell in that first 7 days, okay? Does that necessarily mean that you're going to get above asking price? Not necessarily, because only 37% went above asking price, but you're at least in the category to hopefully get that. If you list price was at 38%, so if you go down to 8 to 21 days, now you're starting to, there's only 19% of the properties in there, and then 22 days plus is 33% of the properties. Now here's what's interesting. So we have 33% of the properties went 22 days over market, but only 25% went lower than list price. So you can still be a little bit patient. Excuse me. Still be a little bit patient with regards to if it doesn't sell in that first 7 days, but if you do sell it in that first 7 days, that's where you have the chance to get over listing price. I hope that makes sense. I know that was a little bit confusing. With the financing versus cash, 84% had financing, 16% had cash as far as the offers were concerned. Now sellers, you've probably heard the stories where you're getting all these clean offers with no contingencies. The majority of contingencies are still in the contracts right now. So even though there's a lot of demand, and even though we're seeing properties going very, very quickly, we're still seeing contingencies. So you can see 75% of the contracts had a finance contingency. Appraisal contingency, 70% had those, and inspection contingency, 66% had inspection contingencies. So you may get fortunate and be one of the 0.25% to 34% that didn't have contingencies, but it's more likely that you will have contingencies on your contract. So there are ways to prepare for that. There are ways to make sure that you have perceived demand so that your buyers don't try to negotiate with you real heavily on an inspection contingency. There are other things that you can do to really encourage those buyers not to have an inspection contingency, or to work with you in a way that is favorable to both of you, not where they start trying to nickel and dime you on repairs in the event that they do get that contingency. So anyway, that's where we are as far as contingencies. So be prepared for that. And then a lot of buyers or sellers also are under the misunderstanding that they're no longer covering the buyer agent commissions, and this is negotiable. You do not have to, it is not required, but that buyer agent commission very, very likely will be one of the terms that comes in with the contract. And you can see by this statistic here, 98% of the sellers in these contracts chose to contribute to buyer agent compensation. Last week it was like 97%. The week before that it was 100%. So we're usually between 97 and 100% of sellers are contributing to buyer agent compensation. Again, fully negotiable. You are not required to do so, but if you want to compete with the other sellers, you may end up having to do something there. So just be prepared for that. All right. If you have any questions about this market report and these statistics or the strategy moving forward, if you would like to set up a strategy session where Kelly and I can actually come and we can look at your property and give you suggestions on how to get the property prepared for maximum dollar value. We can tell you what that might look like what you might be able to get for your property based on what your goals are, and talk to you about that, and put together a total strategy session to see what going on the market might look like and how you could best get out there and get top market value in this high demand market right now. It's a great market for it. So if you're interested in that consultation, we're absolutely thrilled to do that with you at no charge. You do not have to use us as your agents. Of course, we would love for you to, but you do not have to. There's no obligation, and if you choose not to use us, then you still walk away with some very strategic and real information. All right, the number is 703-783-2143. To set that up, you can call us or text us at that number, and let us know if you have any questions. We'll see you on next week's video.